All right. We're going to circle back on some of these earnings that have come out over the course of the past couple of weeks or so. And we're going to bring in Gavin McGuire, and we're going to do what we did a couple days ago, where we run through some of these old earnings reports and see where the opportunities may lie. So, therefore, I'm going to bring back in my partner in crime, Gavin. What's up?
Nothing, Jim. Nothing. Just going through a lot of these charts, and similar to the markets, a lot of good-looking charts out there right now,
All
post
right.
earnings. So,
Yeah, so I'm going to start with one that we really don't talk about that much, and that's because it is a Japanese domiciled company, and that'd be Sony. And I'm curious what you like about this chart. You think it's on the verge of breaking out? I know it's got a nice little V-shaped back from earlier. Well, I guess that was last year in this $42 range, but this thing's really come off or really come alive since then. So, what's your thoughts on Sony?
well, the problem is it should be lower. I think. I mean,
Okay.
the guidance that they. But that's what I kind of like about the chart is that, in fact, it's extended over its 200-day moving average here, right?
Hmm.
Broke above that in mid-June, and it's been able to stay above that level. It's above the 50-day. It's been above the 50-day since early June, and we saw it around earnings. So it reported July 30th, right? And it popped up that day. Uh, Despite what wasn't the best looking round of results in my opinion. They did beat by $29 well, yen, I should say, and the revs were in line, and then they lowered their FY20 EPS outlook. But the stock's been holding pretty steady, and you would think with Japan seeing a little bit of weakness between their own trade war with South Korea, and of course weakness in the Asia Pacific area, and a focus from the Trump administration as well on just anybody that's imported over here. This is held pretty steady, and as long as it can keep above that 54 level, and if the market starts turning around, I just think that this chart looks pretty good. It's got good support down in 53 where the 50-day SMA is, and the fact that it's been able to stretch above all its moving averages. Now, I'm not saying I'm in love with this one, but given the results and the price action that we're seeing, I was pretty impressed with it.
Yeah, this is it does look, it looks a lot cleaner if you look at it on a weekly chart because you don't have all those gaps in there. And yeah, I see exactly what you're talking about now. It does look like if you draw a nice little trend line, it's got nice support there. And not only do we have that 53 level as a 50-day moving average, right around 51 we got the 50-week moving average. So definitely some support in that low 50 region. So yeah, now I see a little more why you like this one.
Yeah, so it was one of those. I've got a list of about 300 names, and really all it is a compilation of what I do on a daily basis. And I started doing it last quarter, and I got it this quarter. I'll see if there's any good way to put it together for a meaningful um, attachment or PDF file for people. But and then I just go through and I look at the charts, and if I see one that pops out to me, I take a look at the what I wrote on it that day, and that's kind of where this one just popped out from. So I know we usually, like you said, Jim, don't follow the ADRs, but this is one that I was impressed that I was able to hold on.
All right. And I think, if I recall, was that weakness due to some problems in their, was that when they were going, they had some problem with the movie segment, or no? Was that way back that I'm thinking?
Now, when you're talking weakness in
Weakness
which
back in
time frame?
that I guess early 2019 area where we put in a very nice base, right around 42 in this chart.
Right. To be perfectly honest, I didn't follow, and you're looking obviously at those April lows. I haven't followed the story closely enough to speak intelligently on why it was in that downward trend, but certainly now in a marked upward trend. And, that 61 area was the highs back in October. So, as long as we can continue to hold 54 and the markets hold up, I think that we could get back for a retest of that.
All right, let's move on to Under Armour. UAA is the ticker there. So as a
Don't
sword,
like it.
This one pulls up. Yeah, so what I was going to talk about is this one's on the verge of a potential breakdown. You can see there was some old support. I have the horizontal line there right around 20 and a half. Now, that's the vulnerable part. We've got um, a very weak looking chart. It's below the
Hmm.
200 day. We're forming a base. It's tricky to see whether that is a base as buyers are kind of stepping in, or if this is just where sellers are kind of loading up for the next leg lower. What do you think of this one?
Well, I mean, you also have the trade headlines on, coming, getting ready to hit retail, in particular on September 1. I don't know where UAA has their sourcing at all, but given this chart, the fact that it's really not seen any sort of bounce off this 20 area, that has me thinking that we're looking at another leg lower as it remains above this 200-day moving average. I mean, stock got hammered about 25% post since its earnings report. The earnings report didn't appear to be all that poor. They beat by a penny, revs in line. They did guide their FY19 EPS below consensus, but they reaffirmed their FY19 revenue outlook. But that EPS consensus, I'd be further concerned with the potential for an increase in tariffs on China that's expected to hit the retail sector. So, I just think that this is one that you don't want to be trying to get cute with and try to play a bounce at this 20 area. If anything, I'd be looking to lean on this if we saw it move up a little bit, and then would expect it to roll back down towards those December lows.
Now, I will highlight Adidas had their earnings overnight, and pretty strong move off the lows here on this daily chart today. So I don't know. There, it seems as though it would make sense that Adidas would be a likely peer for Under Armour, but you can see a big difference between the chart for Adidas, and that ADR ticker is ADDYY for those paying attention at home. Quite a bit.
Well, a peer, but also a competitor, right? So, Under Armour's loss is Adidas's gain, and just see from my perspective, and it's a European-based operation, so they're not putting the tariffs on from the sourcing of China and stuff. So, I don't know if it's an exact apples for apples story as much as they're in the same wagon. And you got Nike, and Nike's seen a little bit of a bounce here back through its 200-day moving average. We haven't seen any such movement out of UAA. So it's kind of like we're talking about with cloud space and retail in particular, where you got winners and losers. And the price action kind of points out who the winners and the losers are. And right down to me, that UAA looks like that's going to be one of the beaten down names.
All right. ZBRA is the next one we're going to talk to. Zebra, or the next one we're going to talk about. Zebra
Um,
Software,
yeah.
Zebra
So
Technologies.
this was one, I remember Honeywell's got a unit that did really poorly in the same business environment that Zebra is in, and a lot of people were getting cautious on it. It's a 53 million float, only about 5% short interest, so not a ton there, but basically they manufacture and sell automatic identification data capture products. So, it was an area, like I said, that Honeywell segmented poorly, and everybody had this one up for sale. And then Zebra came in and surprised with a pretty strong report, beating by 13 cents. Revs were in line, but they got a Q3 in line. There was expectations for a lower guidance there. They reaffirmed their FY19 revenue guidance, and they also announced a 1 billion share repurchase program. So that always bodes well. Stock bounced off the 200-day. Now it's coming up towards that 215, 220 area, Jim. And I think we should see a test of it. And that's going to be the key area on whether or not Zebra can continue to run back up towards those April highs.
Yeah, I was scanning through the weekly chart. This daily chart looks pretty good. You can see lower highs, or or higher, excuse me, let me rephrase that. We see higher lows on this upward sloping chart, but if you scan out to a weekly chart, the chart looks even better. Looks like a very nice pullback. Every time it hits that 50-week moving average, looks like it's pretty close to being a buy. Looks like this one does definitely have an upward trajectory here. So are you getting involved in this name? And if so, what are the levels you looking at?
I'm not involved in it yet. Just was one of those, like I said, it's just an exercise that I do. That going through and just looking for some trading opportunities, and it was one that stuck out as a decent looking chart, particularly on those longer term weekly and monthly looks.
All right. Next up is Apple. This one had a nice bounce off of that convergence of moving averages. Tested the 100 EMA on, let's see, what day was that? The 5th. So that was, let's see, was that on the 5th? Yeah, it looks like August 5th. Came down, tested, had an inside day the very next day, and now broke out to the upside yesterday, continuing. We just closed the gap that we had. So gap resistance here in Apple. Now that we've seen that and walked through this, do you see further upside in Apple?
Yeah, I think it's very market dependent. Certainly, people will be looking at Apple's got its fair share of exposure to the trade wars. Um, we've seen its Apple vendors such as Light this morning, LITE, really posting strong quarters, which follows up on Apple. I don't have much of a feel for it, to be perfectly honest. I just wanted to point it out just because I figured I'm sure people would be curious at taking a look back around after a week's worth of trading action post earnings, what exactly is going on. We, of course, had that nasty reversal down with the rest of the market sell off on the trade headlines. But the 50 and 100 day and 200 cycle all appear to be playing some support here. So I think if you're of the mindset that the market can go higher, and I am, then you want to get involved. But I do think that there's the potential for it to be a little bit of a bumpy ride here. So, if push came to shove, I think that you'd want to be leaning long. And, you'd basically be using that 50-day moving average at 198 as your protection for where you'd want to have a stop in.
Now let me ask you a tough question here. Is Apple market dependent or is the market Apple dependent?
They're pretty much hand in hand, right? I mean, what's Apple? 2.5, 3% of the S&P. I don't know what it is as percentage of Nasdaq, but both the market and Apple, I think, will be swinging on trade headlines. So therefore, I just kind of look at them as a proxy on each other. I know Brett was out yesterday, and there was a feedback, and somebody was asking Brett to trade more equities. And basically, his response was, he focuses on futures, and his response was, if I'm getting short the S&P or Nasdaq, that means that most of the large caps that are significant influences in there, he'd be short too. And I think that Apple would be a perfect example of what he's talking about in that eye. So, I think Apple is a vote on the market. If I was to take the bigger player, it would obviously be the market, but Apple's obviously a key component of that.
Yeah, indeed it is. I was curious, do you know what the percent of Apple is in the Nasdaq now?
I don't. I don't have that waiting there. I could check it out if you want to read out scalps trade here.
Oh, okay. Yeah, for sure. Let's see. So DCP is where scalp traders going with this one. Let me get that one on the chart. So reestablishing a swing long position here in DCP following strong earnings. The stock is currently trading 24.65 and looks like he is going to put on a 2/3 size position and adjusting his stop to the $22 area. So it looks like he saved almost $2 taking this one off ahead of earnings. So he's reestablishing his position, putting on 2/3 size normal position, so 2/3 of a normal, and risking down to the $22 area. So stock's trading 24.67 right now.
Are you still there, Jim?
I am still here. Are you still
Okay,
there?
sorry. Yeah. Sorry, I was waiting for you for your signal there. So I got Apple as the Nasdaq 100 is about a 10% weighting in there. Microsoft the largest at 11.5.
Oh wow.
Amazon next up at 9.8. Facebook next. Well, really Google because Google's 5 and 6 with the Goog and the Goog L. That would be about 8.5%, and then Facebook at about 5%.
Okay.
I realized
All right.
Comcast was at top 10.
Yeah, I wouldn't have guessed that either. Actually, I didn't even know Microsoft was. I knew they were up there, but I
Or
didn't know they'd be
Or
the leader.
PepsiCo for that matter. What the hell's
In the
PepsiCo
Naps
doing?
in the Nasdaq?
Yeah,
Huh.
PP 10 highest weighted at 2.20.
Isn't that something?
Maybe they have fancier cans than I'm aware of. I'm a Coca-Cola guy myself.
Yeah. Well, yeah, you learned something new. Well, why don't we talk about Mondelez? I always confuse Mondelez with Pepsi.
Yeah, well, I mean, pretty much the same business, more or less, right? Mondelez, there wasn't anything sticking out outside of. I just kind of wanted to point out the strength that continues in staples. Obviously with bond yields falling off a cliff, these dividend yield plays just continue to be attractive for people, and that's certainly pretty evident in what we're seeing with Mondelez and the XLP as a whole, really. So nothing too exciting in the Mondelez. I just wanted to note that as something that was sticking out from my side of the picture here.
And I
Next,
think, I'm sorry, I think they also have a high short interest though, don't they?
I don't think so. Let's take a look. I mean, the big staple name usually doesn't fall in under that high short interest. I don't know if you're thinking of Mercado Libre. I know I always get the two mixed up. Short interest is under 1%, so yeah, it's negligible.
Okay.
And if you're wondering what some of the brand names these guys own, it's Cadbury's, Toblerone, Oreo, Bevita, or Belvita, I should say, Tang. A little bit of Trident gum in there too, Jim.
They
So
still make Tang? I
they
didn't
still
even
make
know that was
Tang.
still out there.
Yeah, I mean this was formerly Kraft Foods, so anything that Kraft Foods did. I didn't realize they're based out of East Hanover, New Jersey. It's close to where I grew up, Jim.
Oh, well, there you go.
There you go.
All right. Ford and GM, that's close to where I grew up.
Yep.
All right.
Motown.
All right. So
You
let's
ever seen the documentary Standing in the Shadows of Motown?
no, I haven't,
That's a good one. You should check it out.
but I did see 8 Mile.
Yeah.
Right. So EA, Electronic Arts, kind of healthy looking chart there, breaking out above these convergence of the moving averages here. I like this one above 92, and you don't really have to risk too much if you got involved today. What's your take on EA, Electronic Arts?
Pretty tight range. I'd be curious, and I certainly don't want to make light of this situation by any stretch, but I think it is something you have to focus on with a lot of the Republican commentary on the shootings that have been going on, discussing the need um, to rein in some of these shoot 'em up games and stuff. So I don't know how that would affect EA and Take Two and all those guys. I mean, Take Two is definitely the much better chart here. That's up to 131 now. That's breaking out. So EA's just been coiling though, and I want to keep an eye out on that. I believe President Trump's invited a number of the tech companies there to discuss about some of the issues with social media and everything. I don't know if the video game companies are going to be involved there, but I don't love any of the names. If I was to take one, it would be Take Two, given this price action. But EA is one that I'm setting the alert for anything below 90 or anything above 95. Then I could perhaps get interested on either side of the trade, to be perfectly honest. It was a pretty sloppy quarter. It usually is. There's a bunch of tax benefits that gets involved with for EA. So, it's a little tough to discern the earnings that they had. But overall, I'm kind of curious to see if anything comes about with some of with the politicians here in this space before I'd be jumping into EA.
All right, so a name that you cover pretty well. I think this is in the solar space. Enphase Energy. This one continues to just surge higher. Am I wrong? That's a solar name, right?
It is a solar name,
Okay.
and we discussed it yesterday because I was trying to point out to people the idea of not trying to fade Solar Edge Technologies, SEDG, which is Enphase's peer. And I was kind of pointing out the price action in Enphase, which is stretching to the upside now, and we're seeing similar action in Solar Edge. And Solar Edge's neither valuations is overly egregious. I would argue on the price to sales side at least anyway, but I think Solar Edge has some more upside here, even with that big rally, and
All
that's SEDG. So that was kind of my read off of that.
all right. Let me pull up that SEDG chart for you. Yeah, very similar looking charts there. The
Yeah, very
N
similar.
Yeah, Enphase though is a little cheaper, so I guess if you're going to play the theme, you can accumulate more. You can accumulate more of the ENPH.
Well,
Just
you're just
this one's down
saying
in the $30 area. Yeah,
you're saying cheaper on the
yeah, just price.
just cheaper price. So
Yeah.
let's take a quick look at that before we send people off. So said G's 21 times forward PE, obviously above the 16 and a half or so that we're trading in the S&P, but not an obnoxious price to sales at 3.91. That's a 45 million float with a 10% short interest, and then Enphase. That's trading at 32 times forward P and a 9 times price to sales, so it's more expensive than said G. And this is a 96 million float with a 13% short interest. So said G actually, Jim, is the cheaper of the two.
Oh, what do you know? SEDG, and this one is trading. Hold on one second. Right around that $80 area. So, what do you do with this, Gavin, if you want to play it? How do you get involved? Do you wait for a pullback down to say 69.70, or do you wait, or do you go with the breakout?
I think that you just kind of have to try to go with the breakout. I don't, and put your stops. Put your stops down at 74 and look for it to hold that ground. So obviously a little bit of a wider swing here, but I do think that there's some further upside. Despite if you're taking a look at it, you'd probably be a little concerned of a reversal here. But with the markets acting a little stronger, I think that you should be okay. It obviously broke out above that 70 level, which was the key area. So I think the reflexive actions to try to short this, but if you didn't want to chase it here, and I wouldn't blame you, I would allow for it to play out a little bit and maybe see if it does swing back in. But you could miss that run potentially if you do that. I think that's what a lot of people were looking at end phase, and at that pop. Then it did roll back around a little, but it did hold that bottom. So I think if you wanted to I think there's room to be a little patient here and see if it does swing down. But if it got into that 76 area or something, which would have been this morning's lows, 76.20, say it pulls back into that, I think that would be a good place to initiate a position with about a 4 point risk and have that 72 area in there where you'd have the protection from 74, the gap up support.
Okay. Let's see. Next one we're going to talk about is FireEye. FEYE is the ticker there. And as it pulls up, this one, I don't know, man. This
I'm
one
saying
just,
stay away from it is basically why I wanted to discuss that one. I mean, I know a lot of people look at this as potential value. For me, it's a value trap. So I just wanted to highlight this one as one that it was a poor quarter again, and they continue to have that. So, I would be a little cautious on it, and would not be looking at this as a nice beaten down option.
All right, so Gavin says stay away from FireEye. You staying away from Gilead? This one looks like it's trying to form a little bit of a base around the 62, 62 and a half area.
Yeah, I'm not staying away from it. I do like this for the basing. I mean, you just take a look at it on the weekly, and you could see it's been putting in that area for a long time now. Um, they had uh, the product sales were up. Their HIV sales actually surprised to the high side, which was a positive, was up 10%. They do continue to have, and it was really driven by that Biktarvy drug that they have, and that should be a key driver for them. They do have the was the Hep C, I think that continues to be a drag, but at the time I said I could be enticed to put this on for a longer term holding, and I do like the way that it continues to see just a bottoming at the 62 area. So I don't think that you should be jumping into this one expecting to make 10% in a week. But this is a space that I think is slowly breaking out from that downward trend. Jim, I don't know what you think about it from a weekly or a monthly perspective, but putting in a nice bottoming pattern there that could potentially finally be getting a bid.
Yeah, it's tricky. I can see exactly
It's
where
tricky.
where you're saying you definitely know where your risk is, and that's below 60. So if you do like it, I would key off that $60 area. That if it breaks below that. Now, one of the things I've noticed, Gavin, is sometimes you have to give it some room to allow it to break 60. I just don't know where that level is. I have a tough time handicapping how far it'll go. I mean, if you think, oh, I'll give it to 58, it might go to 56, for instance. You know what I'm saying? Then it'll bounce right back, and even though you were right in the trade, you got stopped out because you didn't adjust your risk accordingly. You can have the right level, and theoretically, you would totally be right. However, they do chase the stops, and people will get in panic mode. All of a sudden, you think, 59 and a half might be a great place to put a stop, and theoretically it might be. However, they chase the stops, it might go down to 56 and then it get back in. So what is your rule of thumb when doing something like that, where you are trying to assess your risk? You know where you want to be out of the trade, but yet they do a stop run, and you kind of get the capitulation move that you get caught in the middle of, and then it rebounds without you.
Hold on, quick second. Okay, so you're just saying for Gilead in particular, like where I'd want for an entry?
How would you play? So what I would do in this case, if I was bullish Gilead, I
Right.
would use my stop at the just below 60.
Yeah.
That's where I would think, okay, I'm giving myself $4, and I think the upside here is, 75, let's call it. So, you've got a really nice solid risk reward ratio in going for you and on a trade like that. However, what I've seen happen quite a bit is that the just below 60 level
Gets
triggers a
flushed.
stop. Yeah, exactly, triggers a
Yeah.
stop run, and it may go. And you think to yourself, I want to use maybe a little looser risk, so I'm going to use 58. Well, that just might not be enough. It might run down to 60, or I'm sorry, it might run down to 56 or 54, just because that's where the panic comes in, and then you're out of your trade, and it rebounds without you.
Yeah. Yeah. I mean, that's always a
Is that just
concern.
life? Is that you just
That-
have to deal with
It,
it?
it is life. I mean, it's one of those things because, like, you talk that scenario, but then there's the scenario where you wait for it to get to 54, and all of a sudden it just runs from 64 to 75, and you're like,
Without you,
damn
yeah, yeah.
it. So, ideally, this is what I'd like to do. Um, I mean, I would be looking at the risk reward setup and the upside target. I think it's fair to have it if we're looking at the weekly 200 around that 75, 76 level. So we're looking at about 11 points. So I wouldn't want to risk much more than five because I definitely like at least a two to one risk reward ratio there. So, I mean, ideally, what I'd like to see is a little bit dip down to 62, 63, and then I could risk 4 points and leave a little wiggle room below the 60. But in this situation at 64.33, what I'd probably be more inclined to do is just put the stop around 61
Hmm.
and looking at that April low of 61.58, basically, I'm kind of keeping an eye on that, figuring that if that gets triggered, then I would think that this 60.32 low from December 28th gets triggered, and we go down. So, it really depends on the situation. But in most cases, what I'd like to do is try to set the stop a little bit above where I think that flush would be, because it's the idea that if I'm going to lose to 3 points here and it gets down to here, then chances are I'm not going to like the trade. I'm not going to like how the price action's shaping up, and I'm going to expect to get flushed out for an additional 3 point loss or whatever it might be. So for me, I usually try to like to get it where I could put it at a comfortable stop, where I could incorporate that flush. Now, what I mean by that is if this was trading around 61 at this point, and I was a little bit more okay with some of the price action that I'm seeing there, then I'd be more inclined to put in a position there with the 4 point stop and giving me that little bit of a flush wiggle room. Does that make sense?
Yes, it does.
Now you're not always going to be given that opportunity, mind you. So and that is always a tough thing to put in at those areas, just because of the idea, like, do I want to buy this? It looks like it's going to flush down lower.
Mhm.
That's usually why I like to see the stock acting a little bit more positively and in a smaller upward trend, if you will, than what we're seeing right now in GILD. That's probably one of the reasons why I haven't put anything. Now, if I saw this thing crawling back up towards that 67 level, pushing through the 50 weekly moving average, then I feel a lot more, and there's more momentum to the upside, then I definitely feel a little bit more comfortable. And that's pretty much why I'm throwing it on the radar here, just as pointed out as this is one that I could get involved with if I start seeing some of that price action.
Okay. All right. So another one we're going to take a look at is CME. It's
Yeah,
a
this one looks
stock.
great.
Yeah. So let me get this chart going for us.
Now, not looking to chase it here, but it's definitely got some breakout potential. So that's why I was just kind of throwing it on the radar there. Um, watching this play out, ideally you could get a little bit of a pullback here to that 207 area, and that holds up, and then we see it press back higher. But just wanted to throw it out there. I'm not sure why they are performing so well. So that's one of the reasons why I'm not getting. I know that revenues are up 20% year over year. That's always positive. Their average daily volume was up 14% in Q2. So good numbers for sure. And that's obviously being shown in this action here. But one that's breaking out, one that I'm going to just kind of continue to watch, not chasing it.
All right, and that 207 area represents the old breakout high. So you can see that a couple days ago we broke out of this one. Wow, this one was flourishing when we were trading lower. So I guess that makes sense. Increased volatility, this stock will move higher.
Yeah, again, one of the reasons why I was curious as to its price, as to its action there. So, it's just one that I want to keep an eye out on and follow along if the market continues to act well.
All right. And then the last one we'll talk about here is GE. This one pulls up on the radar quite a bit. Gavin, you were involved in it a long time ago. I know you watch it pretty closely. The interesting price action that we saw here, it dipped below the 200-day moving average just yesterday and got a bullish upswing on that. It's right now testing that 200-day again. Are you interested in GE yet?
No, because there's a lot of put activity going on in this one, and there's a lot of big money leaning against this. So, we've certainly seen Stephen Tusa from JP Morgan out cautious on it. And I really think that a lot of people are trying to pull this one back in at the moment. Just watching the ScanX post pop up while we're talking, Jim, I see GE coming in with some pretty large volume to the downside here, and I expect that to continue. Just noting NEO with some nice volume to the upside here for that matter. But anyway, I do not like this name right now at these levels. I think you could get it cheaper, and it's one that I'm going to be watching. I do expect to see it break below its 200-day and come into 9. And then I might finally be warming up to start a little position in it, because the last round of results were pretty good. And I think it's a name that's got a little bit further downside as the big money leans on it, but that could open it up a little bit of buying too.
All right, let me look at this one on a weekly chart and see if there's anything. Nope. Uh,
It's probably tough to really see too. Yeah, the
yeah.
weekly does. I was expecting it to look a little bit better on a weekly actually, but yeah, no, I know this is one that a lot of people talk about, but given that put activity and the puts are expensive here, so I'm not looking to do anything on that side. But I think that's when I was lower to go, and I got my alert set for 9. I'd like to see how it reacts coming into that level, but I think I'd love to see a nice little flush here, and that could open up a little bit of buying potential for an investment piece.
All right. Well, earnings is out of the way for this one. The next one looks to be in late October for GE, so at least you won't have that
Yeah, we're still a ways away from anything there. I don't know. I mean, obviously, I'm sure they'll be talking at a number of conferences and stuff. So
Yeah, and they actually do provide updates from time to time, don't they?
yeah,
On those on when they do their conferences, they'll do a guidance update, or um, maybe they had that
and
in.
and you never know with them with potential for divestitures as
Right,
well too.
right. So,
But I mean, I guess the one positive for them is that the corporate debt market is performing well. I mean, you just look at the HYG or the JNK. What's the LQD is the third one, and there's as with the rest of the bonds, there's still tons of buying in there. So um, investment grade bonds look pretty weak. That's interesting, uh, or at least today anyway. But so I mean that all bodes well for GE. But I do think that I mean the stock rallied about 40% year to date. So I think we're seeing a little bit of swing profit action, profit taking going on. So
yeah, well, earnings are kind of winding down a little bit. The last busy night will be tonight, actually. Are there any that you're really
thankfully.
looking? Yeah, are there any that you're looking forward to seeing?
Let's take a quick look at that. There's one that I'm curious about, FSLY. Um, that's seen some interest. This is a high short interest name. Recent IPO, cloud space play. Let me take a quick look at some of these earnings, though, Jim. Well,
I know TTD is one of the names out there.
yeah, of course, TTD.
Uber.
Um, let's see, alarm.com. That's one that can move ALRM. We'll probably be taking a peek at that. Uber, of course, as you said.
Dropbox,
Um,
probably.
yeah, DBX. That Fastly that I just mentioned, FSLY. Um, Lionsgate could be of interest. Overstock. They're probably going to have a pretty poor round of results as per usual. We'll see if that takes their stock down. Pretty high short interest, though, so would be concerned about a little bit of a squeeze there. TTD, as you mentioned. So, yeah, there's some of the names I'm looking at. Yelp, YELP. That's always a name that has a tendency to move around its earnings report. And then quick peek as well. It's probably going to take me a second to pull up, but tomorrow morning, I think it's relatively busy. Hold on a second.
I just got a handful of names, really. USCR, um, WRC Worldwide.
Yeah, not a lot of great trading names here. Where we
So
go?
it'll be a quiet early pre-market run through.
Yeah, yeah. I mean, we'll get some of the good names from. Yeah, I can't. There's none that are really
Yeah,
interested me.
yeah. So just a program note. Most of the
A
conversation.
well-deserved break for the in-play team, though.
Yeah, for sure. Yeah, so I'm guessing some of the bigger names from tonight will be the dominant topics of our conversation in our
Yes.
pre-market chit chat for sure. So we'll have to dive in and see if we can find some good trading opportunities for tomorrow. It is the end of a very busy week, man. Do you need a break?
I'm looking forward to the weekend.
Yeah, I bet.
We'll put it. We'll leave it at that because, I mean, the last 2 3 weeks have just been pretty tough. I mean, I think we've done well by the subs. Hopefully, we have. But yeah, a lot of macro and a lot of micro. So I'll be excited to see a little bit of not relaxation, but a quieter August for sure.
Yeah, 2 weeks from now we'll be complaining we don't have anything to talk about, right?
Yeah, yeah, exactly. We'll be itching for more stuff here.
Yeah. All right, Gavin. Well, I think that gave us a nice little rundown of some of the older earnings to see if we could find some opportunity. Really, not a whole lot, though, to be honest. Wasn't a whole lot to identify as real good trading opportunities. I guess it's more throw these on the radar type things.
Yeah, yeah, and exactly. And I get some nice feedback here. Did we tape this, Jim?
I sure tried.
Okay, all right. No, that's good. So we'll be posting this too for people to go and yeah, like everybody said, this is a good way to just kind of circle back and look at the earnings. So we're definitely continuing this. Somebody talking about scratched out of Cloud Dare CLDR. I don't think that's my trade that they're talking about.
No, that was a trade that the listener said that I assume this was a guy. I'm not sure, but he was going to do. Um,
Okay, I'm at 649 for anybody that's interested in that Cloud Dare. And it's coming up to a pretty interesting level here. The post icon spikes 725, and it's through its 50 days. So I like the way this Cloud Air is shaping up right now.
yeah, this was listener who
I
wrote
guess
in.
icon's on CNBC right now, huh?
Yeah, probably chatting this one up. Said he was taking a position heading into this because Carl Icahn was on and is now looks like scratched the CLDR. No momentum from the Icon mention. So hey, it was worth a look. Not a bad idea. You know, you were set up for it and just didn't happen. So step out of the way and wait for the next opportunity. Ain't nothing wrong with that.
Yeah, yeah, but I'm still in my Cloud Air just for.
Oh, so you're still in Cloudera. All
Yeah,
right,
yeah,
all right.
I got in at 649 on August 5th, so we're up 50 cents.
What are you, Carl Icahn's right-hand man now?
If Uncle Carl's in, I'm in.
So there you go. All right. So we got new inside information from Gavin McGuire.
There you go.
All right, my friend. Well,
All
thank you
right,
so
sir.
much for running through these, and we'll be back at it probably tomorrow.
Yeah, yeah, yeah.
We'll
We
find
could.
some other ones, some other
I'm
gems.
sure it'll be a quiet Friday morning. I feel like the market's going to take a collective breath tomorrow. So,
Yeah, I think it's very much needed. So, all right, Gav. We will
all right,
talk soon.
all right. Later.
Okay.